Welcome to a new video on my channel. I hope you're doing fine. Today I want to give an update about the Q2 2022 earnings of Sofi. And maybe before I start, let's just have a look at the share price after hours. And share price is up around 7%. So the this is a good result, at least according to the numbers of the share price. Before we start, again, the disclaimer: I'm invested in the company and therefore I'm biased, so keep this in mind, and this is no financial advice. This is just my personal private opinion. So let's get right into the numbers, and I'll just flip over the charts because I think this gives a good picture about the general business development. As you can see here, the member growth still around 70%, so really high growth. And second highest number in total, so it's still growing rapidly. Same counts for the products. As you can see over here, also the second highest total growth of new products. And again, the growth year-over-year is really high. It's almost 8%, so a little bit lower than the last quarter. However, it's still a huge number. And the same is also true for Galileo Accounts, which reached 117 million accounts. The growth slowed down a little bit from 58 to now 48, sorry. And this is, however, still a huge number. And all positive, I think. Lending products increased year-over-year in comparison to the previous years, to 22% growth, and also the financial service products still growing really high with 100% this quarter in comparison to the last year. So yeah, in total, if you sum up, pretty easy growth around the board, and the growth has been slowing down. However, it's still on a very, very high base. Quarterly adjusted revenue, net revenue is increasing, positive adjusted EBITDA for the quarter, and the annual adjusted net revenue is also increasing from year to year. Okay, and now I think it's easiest to just jump over to the press release first, and then come back to the last pages of the summary of the results. So what Anthony Noto is pointing out in the press release, that they build the products and services to provide durable growth and profitability. This is what we've been seeing in the slides before, and that is what we are delivering. Pretty easy to see if we had a look at the slides before. The depth and breadth of our portfolio allows us to allocate resources toward the best growth opportunities across our diverse offerings, which has enabled us to exceed our performance targets despite continued headwinds in certain businesses. And he's referring to the student loan area or business, and also to the home loan area or business, which has been lower than the quarters before. However, the personal loan has been really good, but we'll come back to this later. As you can see over here, the loss per share has been less negative than the year before, so now it's only minus 12 cents, and the net loss in total has also been reducing. So this is both a positive sign total. And I mentioned already before that the growth of new members and also new products has been the second highest in total in the history. And something which is also remarkable is the growth of the deposits, which has been growing 135% during the quarter to 2.7 billion at the quarter end. So this is really high, and also they saw acceleration since they raised the APY to 1.8 in July. So this is also a positive sign that they can still adjust a little bit and then be even more attractive than before, since this is also reducing their cost of funding for their loans. So this is what they are able to do with the Sofi Bank now. So we saw this already. Now, something to point out, as I mentioned before, the lending segment, the results has been still higher, even though there has been different parts which are not performing as they did before, and this is in most the home loans. As you can see over here, it's 332,000, and 1 year before it was more than double this amount. However, personal loans has been increasing almost 100% and is now the biggest part in this business. And student loans, you all are aware of this, the student loan, there's something which might be decided maybe in the near future by President Biden, how he will go on with the student loans, and if there will be an extension of a memorandum or however the decision is. So, however, despite these facts, it's still up to 3.2 billion. And this is despite the fact that the student loan volume was all down to 25% of the average pre-pandemic volume. And also the contribution profit has been increased by around 60% in this lending segment. The technology platform segment has been boosted by the first full quarter of the contribution of Technisys, and been around 68% increase of the contribution profit. And as you can see over here, even though the directly attributable expenses have been increasing more than the net revenue, the contribution profit was still rising. So they, in total numbers, have raised the net revenue higher or more than the direct attributable expenses. So this is always a good sign. The financial services segment has been, the loss has been higher than the quarter before, which is largely due to credit card business and the building of the current expected credit loss reserves. So they also point out that this will be increasing in the future. However, this is something that they expect, and therefore this is something which you have to take in this environment and also for the segment. And as you can see over here, the total financial service products has been almost doubling. This is a huge sign of trust. You can see over here, Sofi Money has been increasing drastically, and also Sofi Invest. And now let's jump back over to the investor presentation, because now is the time to have a look at the guidance. And as you can see over here, they beat the guidance with between 16 million and 26 million for the adjusted net revenue, and also the adjusted EBITDA has been exceeded. They also gave a guidance for the second half of 2022, and they have a really slim range from adjusted net revenue between 830 and 835 millions, whereas the adjusted EBITDA is expected to be between 75 million and 80 million. So this is a really slim range, which is a positive sign, and I also think that they are pretty sure that they will at least achieve this range, and most likely will also exceed it again. Yeah, so they also adjusted the guidance, and not as some other companies, they lowered the guidance. Now they just increased it again, even though it's only slightly to 3 millions increase. However, I think this is a sign that they are really confident about their the numbers and they know what they expect, and therefore they will be, in my opinion, most likely still also beat this number. However, this is just speculation on my part. This has been, however, the case in the quarters and years before, so I'm pretty confident about this. And I also take this as a hint that they are confident about their numbers and they know what they're expecting, because otherwise it won't make that much sense to raise the guidance, even though it's only slightly. So now let's have a look at the net loss for the quarter and also how much cash they have at hand. So if they are maybe in danger of going bankrupt, and as you can see over here, net loss has been around 95 million for the quarter, and as you can see over here on slide 19, they have around 700,000 in cash and cash equivalent at the end of Q2. And if you now just compare these to the cash burn or the net loss, which has been around, it's rounded up to 100,000 per quarter. So they have at least 7 quarters of cash right now at the balance sheets. So they're not in any danger to go bankrupt anytime soon. However, keep this in mind in case they would have been increasing their net loss. This might be something to have an eye on. I'm pretty confident that they will be turning positive in the net positive within a few, let's say, quarters, maybe 3-4, or at least in the next fiscal year. I think this is highly likely. So all in all, I'm pleased with the results. I'm not really sure, or I didn't really see anything about the stock-based compensation, which is always a part for Sofi. Now I found it. As you can see over here, share-based expense, it's now called, has been 80,000. So it's 80 million in total. And now also the numbers I mentioned before for the cash at hand, it's millions, not thousands. It's still not changing the ratio. It's still really high. Share-based expense in this case, it's only 3 million more than the last quarter. However, it's still a huge chunk. So this is something which is not really good, at least for the investors. And it's almost the same amount as the net loss. So, and it will take some time until the company will get profitable in this case, and also if you add or factor back in the share-based compensation. So this will be will take some time. However, on the operational side, I think the company is well run and is really developing really well. However, this is just something to keep an eye on, or also something which I'm not really happy about, the share-based expense, as they called it over here. So hope you like the update on the Sofi earnings, and until next time, have a good day. Bye bye.